Okay guys, so this is a very important lesson, okay? This lesson literally, now it takes everything you have learned, puts it together and gives you a management strategy. It's not that it's a management strategy, it's really a way for you to figure out whether it's going to be a long-term opportunity or short-term opportunity based on the condition that the market is currently in, okay? So imagine this lesson is literally what it's going to do is it's going to eliminate all the gray areas and it's just going to make it black and white. This happens, you do that. That happens, you do this, okay? So there's going to be no more gray areas after following this lesson. It's that simple, but it's advanced. It's pretty complicated too. And you're going to need to take a lot of notes during this lesson, okay? Probably the most that you have ever done. This is literally going to be one of the most important lessons that we have in MasterClass. And what we're going to be focusing on is literally, what do you do when it's a wave one run? Okay, what's your target? Is it a long-term trade or is it a short-term trade? What about a wave two pullback? What about a wave three run? What about a wave four pullback? What about a wave five run? What about a pullback what about a daily pullback that's rejecting the weekly 50 EMA? Right, what do you do then? So based on all these different market conditions, I'm going to go kind of one by one, and I'm going to show you what the most ideal option is. Whether it's going to be a big opportunity, maybe targeting 6%, right? Or maybe a pullback only going for a 1-to-1 with a simple target like the 4-hour 50 EMA or the recent highs on a CBO or the recent lows on a CBO, right? Or the 4-hour 50 for the ABO. What about if it's a pullback but you have the weekly momentum on your side, such as the weekly 50 EMA rejection? What do you do then? Is it a 1-to-1 or do you push it farther, to the 20 EMA or maybe the daily 50 EMA or maybe the weekly 20 EMA? Okay, so this is what we're going to be talking about right now. So with this lesson, it's literally going to eliminate all the guesswork. What should I do? Should this be a quick opportunity? Should this be a long-term trade? And with this, you're going to know exactly what to do. By doing this, by understanding this, is going to be literally 15 seconds by looking at the chart, and you're going to know exactly, okay, this is a CBO. It's in this market condition. I do this, period. That's how simple it's supposed to be. So I hope you guys enjoyed this lesson. That's enough talking for me. But this is what it's going to be on. It's going to be really important. So grab your notepad or the app that you use best for journaling or note taking or whatever, and literally take a lot of notes, because this is going to be important. It's going to help you guys out a lot. So with that said, guys, let's hit the charts and I'll show you exactly what I'm talking about. Alright guys, so in this lesson, we're going to be focusing on when to take a large position or when to take a small position, meaning a long-term trade or a short-term trade. That's what I meant. And we're going to actually focus, I'm going to draw a trend here. I think it's going to be best if I kind of draw things out in this lesson. That's going to kind of make the most sense because it's going to be the cleanest to explain. And take notes. I've already put a little note here on the right that you guys can see. One with the daily trend and then ABC. So it would be like 1A, start of daily trend, mid daily trend, late daily trend. You guys will know what I mean when I actually start drawing things out and explaining things. But this will kind of depend on management, and this lesson is going to be important when it comes to management, because again, with this lesson, you're going to be determining whether you should be taking a long-term trade or a short-term trade, whether you should be targeting that daily run or taking just a quick opportunity. So let me draw a few things out. And again, imagine we were in a bearish trend. Then again, we decelerated maybe within a triangle. Okay. So we're going to start off with the triangle deceleration here. Yeah, and I'm going to kind of draw out the Elliott wave type of pattern. Okay. So we're within the triangle, and then let's assume wave 5 has come to an end and we have broken out to the upside. Okay, so this is the first breakout, first pullback, wave 3 run. Let's actually make it perfect then. Let's do that. Let's make it perfect. So wave 1 breakout, wave 2 pullback, wave 3 run. Okay, let's draw the fib extension. Then wave 3 run would go to 1.618. Biggest run there would be. Then a wave 4 pullback. Let's toss in the fib. And then I'll delete the fib lines just so that's nice and clean. Now let's say this was maybe like an ABC pullback, you know, so one of those deeper ones. And then a continuation higher, and let's draw the last extension. And there we go. Okay, I'm gonna delete the fib levels now just so it's nice and clean. All right, so what I'm gonna explain here is again, this concept here, okay? So 1 is with the daily trend. So every single time I'll put a 1 on the chart, that means it's a trade with the daily trend. 2 is against the daily trend, okay? Then we got a few things like A, B, or C. Okay, I'm gonna do just one more random thing here. And then a new trend begins maybe on a break of a trend line. Let's do that. Yeah. Perfect, okay? So we have this random bullish trend kind of following the Elliott wave theory. Okay, then we got a double top and a trend change. And imagine this. You know, so we know that when a wave 5 comes to an end, we're going to potentially have that breakout wave. So this is a daily chart. Imagine this is a daily chart. We have this breakout wave. So wave 1 can always be a larger trade, but you still have to be cautious about it. Okay, so wave 1 kind of fits on the description of a 1 1A, okay, because it's with the trend, but it's at the start of the trend, okay, so wave 1 will be a 1A, okay, then wave 3 will also be a 1A, and I'll explain this in a second. It will all make sense what I'm actually referring to. Then wave 5 over here, that would be kind of, you can say, it can either be B or C, you know, depending on how the trend looks, but let's just say B, and then we'll call this C, okay? Like that. And then let me put in the pullback. So here we have a pullback, so 2 against the trend, so 2A, okay? And you guys are probably going to want to take a screenshot of this at the end when I'm done. This would be a 2B. And these guys over here at the tops, they would be a 2C. All right, so now that we have that down, let me explain what I mean by that. Okay, so 1A, 1 is with the trend and start of the daily trend. So the wave 1 breakout is pretty much the beginning of a daily trend, but a wave 3 run is still the beginning of a daily trend. So I consider the wave 3 run kind of like, imagine it breaks the daily 50 EMA, comes back to retest the daily 50 EMA, you know, so I consider that kind of the beginning of the trend as well, okay? Then a 1B, mid-daily trend, so that could be like after a second pullback, you know, so imagine like we had the second pullback and then we have the mid-trend, okay? So the 1B, it's still with the trend, but it's kind of midway into the trend already. It's the second, after the second pullback kind of thing, right? And then we got the 1C, which is either late into the trend. Sometimes we're going to have like overextended trends, right? Or, okay, this is important, or weekly is weekly is against you, okay? So meaning there might be like a weekly high test, but the daily trend is still bullish, but there's a weekly high test, right? So that's a 1C, late into the trend, or the weekly is against you. And then the 2s, so the 2s are against the daily trend. So 2A is against, but at the beginning of the daily trend. So this is the first pullback, right? It's pretty much the first pullback. Against the daily trend is a pullback, right? Then a 2B against the daily trend, but midway through. So this is kind of like the midway pullback, the second pullback or whatnot, okay? And then a 2C is against the trend. So it's these pullbacks here, but late into the daily trend. So these are already late into the daily trend. The wave 5 has come to an end or is coming to an end, right? Or weekly is on your side. So high test, right? Weekly high test, and we form the double tops. So what does that tell us? It tells us a few things. It tells us how long we should hold a position. Okay, let me explain that. Wave 1 breakout. What kind of trade should this be? Should it be a quick 1-to-1 opportunity, or should it be a big play, maybe for 3, 4, 5, 6%, targeting the daily 50 EMA maybe? So this can be like a trade targeting maybe the daily 50 before it breaks out, or you can even play the breakout sometimes, right? So wave 1 kind of breakout, it falls into a 1A category, meaning that 1A trades should be kind of long-term opportunities. Okay, write that down. 1A trades, so 1A. So the trades that happen at the start of the daily trend and are with the daily trend. Okay, so 1A is with the daily trend and it's at the beginning of the daily trend. These are some of the best opportunities you're going to get. Okay, they're going to be some of the largest trades you're going to get. So whenever it's kind of a market is within a 1A, so when the trend is within a 1A kind of phase of the market, and this is something I just created, then that means that those are going to be some of the best opportunities, and those kind of trades you can push for more than a 1-to-1, okay? And like I said, with a 1A, kind of like this wave 1 breakout, okay? So with a wave 1 breakout, you can, a good target for that, and this is something you can write down too, a good target for that would be like a daily 50 EMA if you do not want to play the breakout. Okay, a day trade would still probably yield maybe 5% or something like that, or you can take the breakout, okay, and push it farther. So these are going to be more longer term trades, but longer term meaning you're targeting that daily run to its fullest, right? As a day trader, that's what I mean by long term as a day trader, is you're just targeting that daily run to its fullest. Then a wave 3 run, it still kind of fits under a 1A category because it's still the beginning. Like we just had a breakout and a retest. It's still, the trend has just started. So I still call this a 1A with the daily trend, but it's still at the beginning kind of thing, right? So with this, again, it falls under a 1A category. So if you take a trade on a break and retest of the daily 50 EMA or whatnot, an easy target is the recent highs, right? Or you can push it farther. Maybe there's a horizontal support and resistance level there. Or maybe the next major resistance level is the weekly 50 EMA, which lines up with maybe over here. Or maybe it's a monthly run, so you're going to target the monthly 50 EMA, and that might be all the way up there or something. So these wave 3 runs, they fall under a 1A category, which again, they will be larger trades. Okay, targeting that daily run. More than just a 1-to-1. Okay, so those are 1As. 1As are the beginning of the trend. They are with the trend, and those are going to be some of your best opportunities. And those are the trades where you can probably push for more than 1-to-1. You can have larger targets like the daily 50 EMA, or the daily highs, or the next major horizontal level, or maybe the weekly 50 EMA on a wave 3 run. Right? There are going to be larger opportunities with larger profit targets. Okay, a 1B is with the trend but midway, kind of mid-daily trend. So you got to know when it's kind of already midway through, those aren't going to be like massive opportunities. So when it's already midway through, kind of like specifically if it's a wave 5 run, then you got to be careful with those. When it's a wave 5 run, you can still push it because chances are it's going to go up to the highs. But that's kind of the farthest I would personally push it. So I would like to kind of just target the highs and move along, right? But that's still a great opportunity. So wave 5 runs, so they would fall into 1B category most of the time. 1B is still, it's midway into the trend, so it's not at the end of the trend yet. Once wave 5 finishes, that's the end of the trend, right? So during wave 5, it's still kind of midway into the trend, because wave 5 sometimes can go overextend and it can continue going up, right? But wave 5 runs, because it's a wave 5, because wave 5 is typically the last run of the trend, right? You can still push it, and I personally still push it up to the highs, or maybe there's the weekly 50 MA here or something like that, so back up to the weekly 50, or maybe the monthly 50 is already here, so maybe I would target that. But it would still be more of a larger position, still targeting that daily run instead of a quick in and out position, a quick 1-to-1, right? You know how every single position every single trade, every single strategy, like the advanced breakout, what is the best target on an advanced breakout? It is the 4-hour 50, right? What is the best target on the IBO? It's the 4-hour 50. What is the best target on a CBO? It's the recent highs or lows. What is the best target on the ACB? Also the recent highs or lows. That does not apply to 1A or B. Okay, because 1A or B, they're going to be larger positions. So they're going to be with the trend, and therefore you can push that target farther than the 4-hour 50 or the recent intraday high. So if you take a CBO with a 1A at the beginning of the daily trend, you should not target the recent highs. You should probably target the daily highs or the next weekly 50 MA or the next major resistance level, right? Instead of the 4-hour highs. Same thing if you're taking an IBO. You should not target the 4-hour 50 on this. You should probably push it farther up to the highs or up to the daily highs or farther. Same thing with an advanced breakout. If you're taking an ABO here, you shouldn't target the 4-hour 50, but probably farther than that, because this is the biggest run you're going to get within the trend, right? So now when you're thinking about analyzing a position and you're deciding whether you should be taking a trade or not, you should also be looking, okay, which phase of the market are we in? 1A, B, or C, or 2A, B, C? Because knowing this will tell you how far you should push it, okay? So that's 1A and 1B. 1A and 1B, they can all be larger trades targeting that daily run and pushing up to the next major resistance level on the higher time frames, right? Such as the weekly 50, monthly 50, maybe some horizontal level, maybe the daily highs. Either one of those options work, and they're all going to be larger trades, more than a 1-to-1, okay? 1C, on the other hand, is totally different. 1C is at the end of the daily trend, right? So late into the daily trend, or weekly is against you. Okay, so let me explain that. This is still with the trend. So 1C is still with the trend. You're still going with the bullish trend, but you're kind of coming at the end. It's already been trending for a while. We already had 2 pullbacks. So this was kind of the 3rd pullback that just finished. So that means the Elliott wave theory is already pretty much telling you that, this daily trend is about to finish. Maybe we're sitting on the weekly 50 MA. Maybe there is a weekly 50 MA rejection, weekly against you, as part of 1C. So maybe as this weekly chart pulled back, so as this daily chart pulled back here again, maybe this pullback was rejecting the weekly 50 MA, and now you're trying to go long again. This 1C is a riskier trade. A 1C should not be taken as a larger position. At 1C, you should be sticking to the best target placement for that specific strategy. So it's okay to take a 1C. I take 1Cs, it's still with the trend, but I am more cautious because it's at the end of the trend. And maybe there's also weekly rejection against me. So if there's a weekly rejection against me, I definitely do not want to take this long term. This can also apply to the monthly chart. Maybe there's a monthly rejection against me, right? So I definitely do not want to take this long term. So 1C trades, which are kind of late into the trend or the higher time frames are against us, I'm looking for more in and out positions. So if I'm taking an advanced breakout, I'm taking that advanced breakout to the 4-hour 50 MA. If I'm taking an IBO, I'm taking the IBO to the 4-hour 50. If I'm taking a CBO, I'm taking the CBO to the recent highs, right? On the intraday charts. And then I'm done. I move on with my life. I do not take another position because the chances are the daily trend is probably going to reverse anytime now, right? So let me say that again. 1As, they're great setups. They're going to be some of your best setups. They happen at the beginning of the trend. So when it comes to Elliott wave theory, it's wave 1 and wave 3, right? Those trades should be taken with larger profit targets, maybe targeting the daily highs, maybe targeting the daily 50, maybe targeting the weekly 50, pushing them farther than just a traditional 1-to-1, okay? A 1B is also a great setup. It still fits within the Elliott wave theory. A 1B might be a wave 5 run, which wave 5 run still typically goes to the daily highs and sometimes even farther, right? So a wave 5 run or a wave or a 1B category, right, should still be taken as a daily run. You should still be pushing your profit target as far as possible. Maybe the safe target would be the daily highs on this, right? That would be a nice safe target, and this is typically what I would do. On a wave 5 run or a 1B category trade, right, I will be taking it typically up to the recent highs on the daily chart and then moving on with my life. Sometimes it's also going to be like the weekly 50 EMA or the monthly 50 EMA, right? But there's still going to be nice and larger trades. And then lastly, 1C. 1C is not the best opportunity. Some of you guys might choose to avoid 1C trades, the ones that are like already late into the trend, or maybe the weekly is already against you. Maybe the daily chart is still trending, but the weekly 50 EMA was rejected with a high test. Those kind of things, right? 1C trades should only be quick in and out opportunities. So the best targets for that specific strategy, and you guys know that, like I said, ABO is the 4-hour 50, IBO is the 4-hour 50, CBO is the recent intraday highs, ACB also the recent intraday highs or lows, right? Those are going to be the best targets for you. And that's kind of it for with the daily trend, right? This is important, so make sure you guys you're probably going to have to listen to this many times and take a lot of notes. Then we got 2. 2 is against the daily trend. So pullbacks. 1 was runs, 2 is pullbacks, right? And I also have A, B, or C. Start of the daily trend, mid daily trend, late daily trend. But in this case, late daily trend or weekly on our side. So let's talk about this now, okay? 2A will be the first pullback. Okay, so imagine you have a wave 1 breakout, wave 2 pullback. So wave 2 pullback is the first pullback in a trending market. That would fall under a 2A. It's a pullback, so it's against the daily trend, but it's at the beginning of a daily trend. This typically would be quick in and out opportunity. Why? Because there's a lot of momentum, a lot of bullish momentum. I have no idea how far this pullback might go. It might go maybe just a little bit to the downside. Maybe it will go to the 20 EMA. Maybe it will go to the daily 50 EMA. Maybe it will go to 0.32 Fibonacci, but I have no idea. It's a quick pullback play with not much on our side on a higher time frames. So 2A will be again traditional targets for that specific strategy. So if it's an ABO, it will be an ABO up to the 4-hour 50. If it's an IBO, it will be an IBO to the 4-hour 50. If it's a CBO, it will be a CBO to the recent highs or recent lows, right? Then we have a 2B. A 2B is also kind of mid-daily trend, and chances are a 2B might not have anything on a higher time frame. So let's say it doesn't have anything on a higher time frame, because if it did have something on a higher time frame, it would fall under a 2C, weekly on our side, because 2C I have late daily trend or weekly on our side. So imagine there's nothing on a higher time frame. So it's just another daily pullback. Nothing on a higher time frame, it's just another daily pullback. Same thing. A 2B would also be just traditional trades, traditional profit targets. So ABO, the 4-hour 50, IBO, the 4-hour 50, CBO, the recent highs or lows, ACB, also the recent highs or lows, right? Those are going to be the best targets on a pullback play. 2C. This is where it gets a little bit different, because 2C is now late into the daily trend or weekly on our side. Let's focus on the weekly on our side, because weekly on our side can sometimes happen at a 2A, can sometimes happen at a 2B, and then you would just call it a 2C because the weekly is on our side. So such as the weekly 50 EMA has a rejection. So let's say this pullback here, I'm going to change the color just so you guys know what I'm referencing. Let's just say, this pullback in red, right? So this pullback, that's a 2C, okay? Because it's late into the trend, and chances are this will be rejecting or sitting on the weekly 50. If that is the case, right? If it's late into the trend and or it's sitting on the weekly 50 or it's sitting on the monthly 50, or maybe there's a weekly high test rejecting horizontal support and resistance, meaning that there might be what? A weekly pullback, right? And if you believe there's a weekly pullback going on, or maybe a new run on a weekly because of a higher time frame rejection, then 2Cs can be larger trades. But larger to an extent where, because on this level, do we have a daily trend change? We do not. We don't have any daily trend change right now, right? So this still shouldn't be a long-term trade, but you can push it farther than you can a 2B or a 2A because you have a weekly is on your side or the monthly is on your side, right? So it's kind of fueling the pullback. The pullback's happening because of a weekly 50 EMA rejection or horizontal support and resistance on a higher time frame, or the monthly 50, or simply because it's late into the daily trend, right? So this 2C pullback, this initial 2C pullback, you can push it. So if you take an ABO, you can choose either or. You can take an ABO to the 4-hour 50, or you can take an ABO to the 20 EMA on a daily chart, or 0.32 Fibonacci on a daily chart, one of those options. 0.32 Fibonacci typically tends to work pretty well, or the 20 EMA, right? Or with an ABO, you can choose to be safe and just target the 4-hour 50 if you want. But on 2Cs, because the weekly is on your side or the higher time frames on your side, you can push it a little bit farther than just a traditional profit target at the 4-hour 50. That's all I'm saying. Same thing for an IBO. Instead of targeting the 4-hour 50, you can maybe target the 20 EMA or 0.32 Fibonacci, right? Same thing with a CBO. You can push it a little bit farther and maybe target 0.32 Fibonacci, but maybe not farther than that. Why? Because we still do not have a trend change, right? If it was within a falling wedge like this, it's a little bit different, right? Because the falling wedge is giving us bullish price action. But right here, we don't have bearish price action yet, so we cannot really trade the breakout, right? Whereas here you can take the breakout to the upside, but here you can't really do that yet. So you can push them farther, okay, but not too far. And then this one over here, this is pretty much where it's at the borderline, because now we have a double top, so it can still qualify under a 2C. But chances are, do you believe that a new run might be happening? And if that's the case, then this can turn into a 1A, and we begin the process all over again as a wave 1 breakout, right? Because of the double tops. If it went on higher and made another higher high and there's no pattern, maybe if there's like a wedge or something like that, then you can take it as a 1A again. But if there's nothing on a higher time frames, then it would just be another 2C until you have some bearish price action, right? So let's say we have the double tops. It's at the end of the trend. We have double tops, so you could classify it under 2C, right? But because of the double tops, it would pretty much fall more under 1A. A new daily run or a new daily trend is beginning. And we probably have like a weekly 50 EMA rejection or something like that. So this should give you some clarity on what to do, right? Whether you should be taking a large trade, targeting the daily highs, or targeting the daily 50 or the weekly 50 or the monthly 50, or whether you should just be taking a quick position with the traditional profit targets for that specific strategy. So I hope that makes sense, right? Let me kind of wrap it up one more time, and I hope you guys are taking notes. And you should probably watch this lesson the most out of every single other lesson, I would say, because this is important. This is all fine-tuned. So this is kind of my management. So this adds on to the management, because by knowing which phase of the market you're in and which phase of the market has the best opportunities and how to approach every single phase of the market with profit targets, by knowing this lesson, it makes it so much easier for you because there's no second guessing. You look at a chart and boom, okay, this is a 1A. It's the beginning of the daily trend. it's a wave 1 breakout or a wave 3 run. So I'm going to take this as a larger trade targeting the weekly 50 EMA, period. Right? You already know what you're going to do because it's a 1A. If it's a 1B, okay, it's midway into the daily trend. The daily trend is probably coming to an end. You know, a 1B is typically a wave 5 run. You know, in wave 5 runs, they typically go to the recent highs, sometimes and usually a little bit higher. So I'm going to target the recent highs and get out of the position at that point. Easy. Okay. And then 1C. Well, 1C is already late into the daily trend. The weekly is probably might have been rejected already. So if the weekly has been rejected, if we're already late into the daily trend, so I do not want to take that as a daily run. I do not want to push my profit targets. I'm going quick and easy. I'm taking ABO to the 4-hour 50, or I'm taking the IBO to the 4-hour 50, or the CBO to the recent highs, period. And then I'm moving on with life, right? So that's kind of how you approach this. Now, pullback plays, okay? 2A, typically you don't have anything in your favor. So 2A, unless you have a weekly high test, then it's kind of turns into a 2C, right? But if you have nothing, then it's just a quick and easy trade. Again, an ABO to the 4-hour 50, IBO to the 4-hour 50, or the CBO to the recent lows, or ACB to the recent lows, right? Just quick in and out. Same thing for 2B. Unless it's bouncing off the weekly 50 EMA, right? But if it's not, then again, it's quick in and out positions. A 2C would typically be bouncing off the weekly 50 or the monthly 50, or a 2C would also be at the end of the daily trend. And these ones you can push a little bit farther. They are typically not breakout plays, so it wouldn't be this. A 2C would typically be kind of the last pullback we get. But a 2C also, you don't have any bearish price action with a 2C on a daily chart. So because there's no bearish price action like a falling wedge or like a double top, then a 2C should be taken a little bit farther because the weekly is on your side, you know, with a rejection. And because of that weekly rejection, that gives you a little bit more momentum. So with a 2C, you can choose either go easy and safe and have a normal traditional target, or push your profit target to the 20 EMA or 0.32 Fibonacci on the daily chart for a little bit more profit. And then a 1A would form again after some kind of a trend change, and then you have a 1A again, and then you begin the process all over again. So again, I hope this makes sense. I'm pretty sure I explained everything there is to know now in regards to that. At this point, with this lesson, with this example here, this is just kind of following a daily trend, right? And knowing which phase of the market you're in. So with this, you'll be able to identify which phase of the market am I in. Is it a 1ABC or 2ABC? Is it with the trend and at the beginning, or is it with the trend and at the end? That's easy. You just look at a chart and eventually you'll be able to spot that within seconds. And by knowing this, you'll be able to figure out whether you should be pushing your profit target to the next major level, or whether you should be taking a quick trade following the strategy, an ABO to the 4-hour 50 and so on, right? And this should make your management very black and white and no gray zones. You know, by knowing this, there's absolutely zero gray zones with where to target and making that decision. By knowing this, you should already know, once you look at the chart, where your profit target should be and whether you should be taking a quick trade or a longer term trade. So that is it for this lesson. I hope that all makes sense. I'm pretty sure it will, and this should give you guys a lot of help. So make sure to watch it over and over and over again till all the information sinks in. I would definitely recommend taking screenshots, writing notes, make this as detailed as possible. Okay. And with that said, guys, take care, and I'll see you in the next lesson.